morning. Welcome to the pre-market overview. August 6th, today is Thursday. Happy Thursday to you guys. So just to say, for those that maybe have never been with me in the mornings yet, my name is Becky. That's me there. My email address, becky@tradewithufos.com. So you can email me if you have any questions about what I covered today. Of course, give me an email. To be honest, the support team, we're always going to sort of suggest that people contact those guys just because it's a team. So they're obviously much quicker at getting back to people. So support@tradewithufos.com, that would be the email to get them on. Okay, so just to explain what the pre-market overview is about, what we do. Now, the main body of what we go over in the mornings is we go through our newsletter. So the newsletter is something that we send out every day, Monday to Friday. And in that newsletter, we cover 4 of the major markets in the world, where we think they're going, how long we think they're going to go that way for, where prices might turn, volatility, and news as well. So quite a lot in that document. And we do the pre-market overview to just explain for 15, 20 minutes, a little bit more of these concepts, to just give you guys a little bit more explanation as to what's going on there, why we use what we use, and how we interpret it. So hopefully that will make sense to you guys. If you're not already subscribed to the newsletter and you'd like to be, just email us, newsletter@tradewithufos.com, and we will get that sent over to you. Okay, so a couple of reminders. Today being a Thursday, we have stocks at 9 a.m. today, and then investing at 1 p.m. today. That's within the Tradewith channel. Over the weekend, we'll have sharpening sessions. So these are going to be going over concepts and methodology a little bit more, bring your questions. We have a little bit more time in those sessions to really expand on concepts if you need it. So bring your questions to those. Plus, we have psychology sessions as well, which are so often overlooked, is the impact of trading psychology. So we make a big deal of it here at Tradewith because it is often the thing that holds people back and that gets in the way. So being in those sharpening sessions for psychology, really, really helpful, as well as the psychology course itself as well. Now, in terms of upcoming courses, the next one chronologically that we have is the stocks class. That starts this Saturday. August 8th until the 14th, starts at 10:30 a.m. It'll be yours truly. I'll be taking that class starting on Saturday, 2 to 3 hours a day. Then, like I said, we've got the psychology class, futures, trading plans, and backtesting classes as well. So you've got those dates there that you can take a look at. What I need to do is just put the disclaimer on the screen. So if you guys that might want to read it, that's fine. It's quite a long disclaimer, so I won't, there we go. I won't read it out to you. That will take forever. Maybe you can read as quickly as that's going. Obviously, if you'd like to pause the video so that you can read it, that's fine. Or if you want, you can go to www.youcantrade.com and get additional disclosure information there. Effectively, what we're saying in this disclaimer is that none of this is meant to be trading advice. It's all meant to be a demonstration on how we use the products and how we interpret the products. Of course, there's risk involved in trading, and you need to understand that before you get involved. So like I said, you can pause the video. You can watch it on repeat if you want, or you can go to the website if you'd like more disclosure information. Okay, so let's crack on and go through the newsletter. So let's have a look. So this is the newsletter that we send out. So as I said, we go through 4 of the major markets in the world. So we look at the S&P. So that's one of the obviously major equity indexes or indices. We look at oil and gold, both huge commodities, and then the euro, which is one of the major currencies in the world. In fact, the euro US dollar is the highest traded currency pair globally. And the US dollar just by itself is responsible for 80% of transactions worldwide in the markets every single day. So we have covered a lot of what goes on in the markets out there. And even if you don't trade these markets specifically, there's a lot of correlations, obviously, that happen with these major markets. So maybe what you trade will be correlated to these. Now, we look at a daily time frame for each of these markets. Obviously, different things happen on different time frames. So, of course, if you use smaller time frames or bigger time frames, it might be slightly different. But the daily does seem to fall into what most people do. Whether you're a short-term trader or a long-term investor, the daily time frame is very commonly used. So that's why we use that. Now, for each of these markets, we're going to go into climate, which basically means trend, environment, what direction we're going in. Are we in an upwards climate or an upwards trend? Are we in a downwards climate or a downwards trend? And what are the probabilities associated with that? We also look at propagating, which is how long can we expect that climate to continue? So how long can we expect to keep going up if we're going up? Or how long can we expect to keep going down if we're going down? Based on probabilities, what's average in these markets, based on what is statistically likely to happen. For the climate and for the propagating, we use our Auto Climate app, which I'll show you on the chart in a minute. We also look for our nearest UFOs. So UFO stands for unfilled orders. Now, what we mean by that is where we expect there to be big stacks of buy orders in the markets that are likely to push price upwards, or big stacks of sell orders in the markets that are likely to push price downwards. So those are what we're looking to find there. We use our auto UFOs to highlight for us on a chart where these stacks of orders are likely to be, showing us where price might turn. That's why we use it. We also, for each market, we're going to go through volatility. Now, volatility just means how far we expect price to move within given periods of time, or you could say how quickly we expect price to move. So in order to look at these numbers, we look at the current implied volatility figures. Now, these figures come from the options of these markets. So for those that don't know options, with options, there is a risk of assignment or exercise, basically a risk involved in how quickly these markets move. So when professional traders are buying and selling options, which it is mainly going to be professional traders in these markets, when they're buying and selling options and therefore setting the price of them, reflected in that is the risk they're willing to take. What they're willing to buy and sell it for reflects the risk they're willing to take. And the risk they're willing to take is based on how far they think price will move. So basically, these current implied volatility numbers give us a consensus of opinion as to what professional traders think will happen. So basically, these numbers show us a professional opinion of volatility. So all of the current implied volatility numbers are shown with a percentage. They're also annualized. So what it tells us is what we expect, what professional traders expect in terms of movement up or down in 1 year on these markets as a percentage of its value. We can then break it down and understand what that looks like per day, what movement we expect up or down in 1 day, per week, what movement we expect up or down in a week, and per month, the movement we expect up or down in a month. So again, it's just based on professional traders' opinions. If you didn't understand any of that about options, it doesn't matter, just as long as you know that it comes from professional traders' opinions as to the volatility that they expect, and that's what we go by. Okay, once we do all of that, after that, we will go down and look at news that could be upcoming in the markets that could affect the markets as well. So a lot to get through. We will start with the S&P. So we're using XPX.X. That is the continuous, sorry, no, it's not. That is the index symbol there on TradeStation. So here we have at the bottom our Auto Climate app. So the Auto Climate app shows us in the form of 3 different things in colored dots, whether we're in an upwards climate, a downwards climate, or whether or not we're not really showing much movement either side. So it shows us one of 3 things, either a thick blue dot, which tells us we're in a confirmed upwards climate, meaning we have a move to the upside, we have an upwards trend, upwards climate, and we have probabilities to the upside. It could show us a thick red dot, which tells us we're in a downwards climate, a downwards trend, and that we have probabilities to the downside. Or it could show us a thin dot of either color. The blue or red still tells us what direction we're going in, but the fact that it's a thin dot means that there are less probabilities associated, meaning that more often than not, as traders, we would choose to do nothing on those days. So at the moment, we can see here a thick blue dot on a daily chart of the S&P. So showing us that we are in a confirmed upwards climate, we have probabilities to the upside. Now, in terms of UFOs, where we expect price to turn, we have our closest stack of buy orders here, unfilled orders, UFO, at 3294.61 to 3284.53. Closest stack of sell orders just here, 3373.23 to 3393.52. Again, that's where we expect price to be pushed down once it's hit a stack of sell orders. The buy UFOs, we expect them to push price upwards. Okay, so having a look at propagating, what we mean by this is how long can we expect it to continue? So we saw that we have a confirmed upwards climate. We see that here. We show it on the newsletter by just showing you a green upwards arrow. By the way, if it was unconfirmed, so if there were less probabilities, we would put a little cross next to it. Obviously, today you'll see there are no crosses next to our climates. We have confirmed climates in every case. So just to let you know, if there's not a cross, it's confirmed. If it is a cross, then it's unconfirmed. So with propagating, what we see here on the right is how long those markets normally go in that direction for, kind of the average, the statistics, the probabilities. On the left-hand side, we see where we are relative to that right now. So if we just look at this top one for the S&P, Oh, by the way, everything on the right-hand side, I'm going to round it up. Whatever that decimal place is, I'm going to round it up. So what we see here is that the S&P would normally go up for 10 candles on a daily chart, so 10 days. And we're on candle number 5. So about halfway into a normal move to the upside. So still got probabilities that it's likely to continue to the upside, and we have a confirmed upwards climate as well. Now, again, obviously, sometimes things fall outside of probabilities. This doesn't say always it's going to go up for 10 candles and then turn. It could go past that. It could fall short of that. But again, it's just all about putting statistics on our side, putting as many odds in our corner as we possibly can to increase the probability of making money, right? So we've got a confirmed upwards climate. We've got probabilities that it will continue. We are coming up to a sell UFO at the moment. So we're kind of obviously halfway in between these two stacks of orders. So it'd be interesting to see if we do hit that sell UFO, if the climate pushes through it, or if the sell UFO turns price. So coming down here to look at volatility, we are using VIX.X to get our volatility numbers for the S&P. And what we see here is that in 1 year, we would expect a movement up or down on the S&P of 23.68%, which means in 1 day, we expect a movement up or down of 49.64 points. In 1 week, a movement up or down of 109.28 points. And in 1 month, a movement up or down of 227.48 points. Okay, moving on to the next market, we are looking at oil. We are using @CL there, so that's the continuous futures contract for oil. So here we go. I just need to squidge this up a little bit so that we can see what we need to see. I will unsquidge it as much as I can to make it easier. Can I get them on? There you go, just. Okay, there we go. So once again, we have a confirmed upwards climate. The AutoClimate app is showing us a thick blue dot, telling us we have a move to the upside with probabilities to the upside. Now, we're obviously in the middle of nowhere when it comes to UFOs. We're kind of halfway sat in between these big stacks of orders. We can see the closest stack of buy orders is down here, 26.03 to 25.52. It's actually nestled on top of another one. So we've got 2 buy UFOs just sort of overlapping each other there. In terms of closest sell UFO, it's the one up here at 53.55 to 55.43. So these are the areas that we expect price to turn. So if price was to get up here, we would expect the sell UFO to push price down. If price was to get down here, we would expect the buy UFO to push price up. And like I said, we're kind of in the middle, not really near either one of them. So we did have a confirmed upwards climate again. We see that here. And we would expect normally that oil would go up for 7 candles on a daily chart. So seven days, and we're on candle number 3. So again, we're just shy of halfway into a normal move to the upside. So we have probabilities that that climate will continue. And like we said, no UFOs on the chart at the moment that could really turn price one way or the other. Of course, new orders can come into the markets at any point. We can have new UFOs that show up, but for the time being, no UFOs close by and a confirmed upwards climate with probabilities that it will continue. So in terms of volatility, we look at OVX.X. That gives us the implied volatility numbers for oil. So we can see from that we expect a movement up or down in 1 year of 37.12%, which means in 1 day, a movement up or down of 0.98 points. In 1 week, 2.15 points up or down. And in 1 month, 2.49 points. Sorry, 4.49 points, either up or down in 1 month. Okay, next market. So we're going to look at gold. So at GC, once again, the continuous futures contract there. So let's take a look. So gold's an interesting one because we have no sell UFOs on the chart at the moment. I'll talk about that in a second. So once again, we see our confirmed upwards climate, thick blue dot, telling us we have a movement to the upside with probabilities to the upside. Now, closest stack of buy orders down here. 1836.7 to 1825.9. Now, if I just squidge this up, you'll see we've got no sell UFOs, no red ones up here, nothing there. We have buy UFOs beneath us, but no sell UFOs above us. Now, oh, sorry about that. Oh, there you go. So with the sell UFOs, there are some on gold from maybe a decade ago, which means that the likelihood is that they're cancelled. So we can't see them on the chart that we're using right now. So if you wanted to load decades worth of data, you would see them, but we're not showing them because of the likelihood of their cancellation. So that's why we see here on our newsletter that we have a blank space there. We haven't filled anything in. So remember I said before that sometimes things go outside of probabilities. We see that with these last two markets, more so on the euro. But with gold, we see that normally gold would go up for 6 candles in a row before it turns. And we're on candle number 14. So we are over 2 times extended as to what is normally happening in these markets when they go up for. So we've surpassed, obviously by a reasonable amount, what is statistically likely to happen. Every time we go past what is statistically likely to happen, of course, we lose probabilities that it will continue to happen. If you pull an elastic band and you keep pulling and keep pulling and keep pulling, the more you pull it, the more likely it is to contract on itself rather than allow you to keep pulling it. So same concept here. We go by what is normal in these markets, what is statistically likely in these markets, and we continue to surpass it, then we lose probabilities that will keep going. That's not to say that we won't get another day out of this. Of course, we've been overextended for a while now. And again, we'll see on the euro as well. We are by quite a lot on the euro. So that's not to say that we won't see that continue to happen. It's just less likely. Okay, so like we said, bear in mind, we have a confirmed upwards climate. Yes, we have buy UFOs beneath us and no sell UFOs, but we are overextended there. So just be aware of that. So in terms of movement on gold, we use GVZ.X or GVZ.X if you're American. And we expect in 1 year a movement up or down of 25.69%, meaning in 1 day, a movement up or down of 33.4 points. In a week, up or down of 73.5 points. And in a month, up or down of 153 points. Okay, so final market, Euro US dollar. That is the spot forex of these markets, of this market, of the euro. Okay, so interesting one here with the euro as well. As we can see, we have multiple buy UFOs on top of each other. That's what, 10? If my eyes can do that properly, 9 or 10? Just one on top of the other. And we've seen them do exactly what we expect buy UFOs to do. We had a buy UFO here. Price came down into it, touched the UFO, it went up. Came back down into it, touched the UFO, went back up. Created a new UFO, went up, came down, went up. So basically, these new UFOs were forming. Price came back, hit the buy UFO, hit a big stack of buy orders, and was pushed to the upside, which is exactly what we expect buy UFOs to do. It's push them upwards. And we can see that here. We can see that very clearly, how often that's happened, where prices come back into the UFO and gone back upwards. Now, what's interesting is that we've also hit this sell UFO just here. So closest sell UFO, 1.1914 to 1.1998. Just rounded that where it needs to be. And we can see prices hit the sell UFO and come down, came back up, hit the sell UFO, and has come down a little bit. So again, the sell UFO is doing its job as well, pushing price downwards. So at the moment, we have a confirmed upwards climate, thick blue dot, confirmed upwards climate, probability to the upside. We have a buy UFO here at 1.1802 to 1.1696. We have multiple buy UFOs beneath us, but we've just hit a sell UFO. So it'd be interesting to see now, and obviously we're very close in between those. There's not much room between this buy and sell UFO. So it'd be interesting to see which of them win. Now we've got the climate in our favor to the upside. However, in terms of propagating, we might have more in favor to the downside. So normally we would see that the euro US dollar would go up by 4 candles. And we're on candle number 24. So 6 times overextended what is normal on the euro US dollar. So obviously massively surpassed what is likely to happen. And we've just hit a sell UFO. So we've got confirmed upwards climate in many buy UFOs, but we've also got an overextended climate and a sell UFO. So we've got these two forces playing off against each other, buy and sell orders sort of fighting against each other at the moment. So over the next couple of days, we're likely to see which of those is going to win. So it'll be interesting to see there. So we look at EVZ.X or EVZ.X to get our volatility numbers for the euro. So we would expect in a year 8.80% movement either up or down, which means in 1 day, a movement up or down of 66 pips. In 1 week, a movement up or down of 144 pips. And in 1 month, a movement up or down of 301 pips. So volatility gives us an idea of how far we expect these markets to move within given periods of time. The climate and the propagating gives us an idea of in what direction we're likely to see that move and for how long. And the UFOs give us an idea of where price is likely to turn and what forces we have pushing price either up or down. Okay, So that's all that stuff. Let's come down to the news, to indirect forces that can impact the markets. Now, the reason we call news an indirect force is because the most direct force that can move price up or down are buy orders and sell orders. That's it. Buying and selling. That's what moves price up or down. There can obviously be multiple reasons as to why there are buy orders and sell orders. News is obviously one of those. So it does have an impact in the markets. We can't deny that, but it's less direct of an impact than the simple existence of buy and sell orders. So with the news, what we see here, we go to fxstreet.com/economic-calendar. We filter by high impact news and by US markets. So if you trade outside of that criteria, you can click on that link and you can change the filters to see what suits your trade plan a bit better. Now, on the left-hand side, we'll see the time of day that we're likely to see these bits of news coming out. And obviously, we see the dates. So Monday and Wednesday already happened. Oh, sorry, I didn't mean to do that. There you go. Monday and Wednesday already happened. We've already seen that happen. Now, we leave it on there just to show you that under the actual column, when the news actually comes out or when the report comes out, it will fill in here most of the time. If it's not something that can be quantifiable by a number, then you'll have a little box that will say report or speech and you can click on it. But otherwise, it will show you as a figure. Obviously, Friday is tomorrow, yet to happen. That's why it's blank. Okay, so once that news comes out, we'll see it there. It will fill in into that actual column. Now, like we said, the next news is on Friday. Nothing today. Friday tomorrow, obviously non-farm payroll, so normally quite an impact that we get from that. But like I said, nothing today that we know of. Of course, sometimes unexpected things happen. Okay, so a couple of reminders before we round off. If you want to join the fun and come and be with us in our sessions for futures, options, investing, stocks, psychology, sharpening, methodology, the support and the resources we have as well, you are welcome to join us at tradictive.com/you-can-trade. And you can join us for a couple of weeks for free. So you get 14-day free access so that you can try us out, see if it makes sense first, see if it sort of fits the way you think and the way you trade, and go from there if it does. In terms of the next class that we have, this is going from the foundations upwards, where we're going through how we apply that methodology, going through obviously auto UFOs and climate and all of those things, and how it applies to a specific asset class. In this case, it's going to be the stocks, the stock market. So it's a stocks class, tradictive.com/stocks live. You can learn a bit more about it there. Again, like I said, I'll be taking that class on Saturday the 8th, is when we start 10:30 a.m. Eastern. Now, you can register for any course and choose an additional course for free. So go to the website, see what courses we do and play about with it, obviously, to find the best way that you can make the best out of that deal. But it's basically a buy one, get one free situation. Okay. So that's me done for today. So we'll see you, obviously today being a Thursday, we have our stocks and investing sessions. So we'll see you there if you're part of the Tradictive channel. If not, then we'll see you tomorrow morning. I'll be back tomorrow morning. Today, my colleague Wayne will be looking at our after hours review, what happened in the markets, what went as expected, which of these forces did win out, what can we learn from it. He'll be doing that at 4:15 p.m. Eastern. But otherwise, it'll be me back again in the morning. So I'll see you then. Have a good day today, guys. Have a good Thursday. Have a good trade.